On today's episode, I want to take a quick look at Sea Limited. They just reported earnings and the stock price is up about 1% pre-market. I am a long-term market investor, so I don't really care about the short-term price movement. I want to look at earnings to see, hey, are there any green flags? Are there any yellow flags? Are there any red flags on their earnings? If this is your first time here, make sure to hit the subscribe button, because if you take a quick look at just my overall catalog, Sea Limited is a stock I talked about more than a year ago when the stock price was sitting at $112. Now it's sitting at $290. And I've done plenty of videos, so some companies that have done some strong returns. So let's get started. Alright, so for those that are not familiar with Sea Limited, they are pretty much the three-headed dragon. They do deal with three main segments. The first is digital entertainment segment. This is their Garena. This is where this company is going to be making most of its money. Then we have Shopee. This is its e-commerce business. This is where most of the revenue comes from, but it's still not profitable in this segment. And the third is probably the smallest portion out of everything is Sea Money, and this is their digital fintech services. So we can see three major high growth markets. So now let's take a quick look at their presentation. For the full year, this company reported 159% year-over-year growth in total GAAP revenue. Huge beat. And let me just say why I think it's super impressive, this type of value, because this is compared to same time last year, and same time last year was already a COVID situation. So a lot of companies grew super strong during COVID, and now that kind of things are opening back up, that revenue growth is slowing down. Sea Limited is not, right? They grew very heavy during the COVID situation because of their e-commerce, because of their digital entertainment, because of their fintech. But even as things are still opening back up or continue to opening back up and less restrictions around the world, they're still growing at crazy triple-digit values. And I think right off the bat, that is the main reason I am still super bullish on Sea Limited. This is a tier 1 stock. It is one of my top 5 positions in my portfolio. I also have a video, I think, on the comments of my full portfolio list if you want to take a quick look at that after this video. But before we go any further, guys, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through The Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to The Motley Fool, and now onto today's video. So if we take a look, 65% year-over-year growth in digital entertainment bookings. If you guys watched my Roblox video that I did yesterday, I kind of talk about how in the gaming market, bookings is the most important, and to see 65% year-over-year growth, that's super strong. I think I did Roblox yesterday and they grew 35%. I thought that was impressive. So seeing seed growth by 65%, even more impressive. If we take a look at their overall EC, which is their e-commerce GAAP revenue, that grew 161% compared to the same time last year. The other thing is, not only are they up year-over-year, they're also up quarter-over-quarter. If we take a look at digital entertainment, this is their Garena platform. Quarterly active users are up 45% compared to the same time last year. They're also up year-over-year. Quarterly paying users, same thing, up 85% this one, and is up both year-over-year and quarter-over-quarter. But unfortunately, there are some yellow flags I want to take a quick look at in a bit. But we can see in their e-commerce, their gross orders have increased 127%. They're up, I want to say, even dramatically over 20% quarter-over-quarter and up 127% year-over-year. Gross market volume was up both, again, 88% year-over-year and is up quarter-over-quarter. So, there's right there, that strong growth. I do believe this is going to keep a lot of bulls happy. If we take a look at their fintech service, this is, like I mentioned, one of their smallest revenue segment for the company, but it is growing. Their total payment volume grew 150% compared to the same time last year. Their quarterly paying users for mobile wallets is up 109%. So digital wallet, even though it's a small portion, still growing. And total gross profit was up 364%. Now, before we take a quick look at at some of the yellow flags, in my opinion, I just want to mention a little bit more stuff about the green flags for Sea Limited. Free Fire is now the third highest by average monthly active users for mobile games on Google Play globally. It's also the highest mobile grossing game in Southeast Asia and Latin America for 8 consecutive quarters. It is the highest grossing mobile game in India for 3 consecutive quarters. It's the highest grossing mobile battle royale game for 2 consecutive quarters, and the second highest grossing mobile game on Google Play in the United States. So overall, I want to say this kind of bullishness or this kind of strength in the game doesn't lose its steam overnight. So Free Fire, I continue to look at it almost on a, I want to say on a weekly basis on how it's doing on the grossing charts, and it's always up there in the top 5 in some of these big countries. Next, if we also take a quick look, Sea Limited also released a new game in Malaysia. In June, they launched Moonlight Blade Mobile, actually in Taiwan, to further expand their portfolio. So they're trying to release a few more games on their Garena platforms. There are plenty of games in their Garena platforms in Southeast Asian countries. Some of them are licensed through some peers. They also had a strong esports event, and it continues to drive strong engagement. In May, they had one in Singapore, which recorded over 5.4 million peak concurrent online viewers. So again, strong numbers all around. Another bullish case in the e-commerce, again, I'm just giving you guys all the green flags at first. In Malaysia, Shopee recorded positive quarter of adjusted EBITDA before allocations of the headquarters common expenses. In the second quarter of 2021, this is making it the second market after Taiwan to expand, to kind of pass this milestone of positively quarterly adjusted EBITDA. So that's another positive note. Now, unfortunately, we have to take a quick look at some of the yellow flags. And as investors, we should also understand some of the yellow flags. Yellow flags aren't necessarily bad. It just tells us, hey, Jose, take a closer eye on this on future stuff. So first, we can see total adjusted EBITDA. Same time last year was actually positive. This quarter is actually negative right now. We are seeing just a huge continued loss expanding in its overall e-commerce business and its overall fintech business. The biggest driver for us is just cost of revenue, and the cost of revenue grew almost 100%, almost doubled compared to the same time last year. Sales and marketing more than doubled. It almost, I want to say almost tripled, but it did more than double. And they do talk about that in their press release. So let's see why that expense is increasing. So cost of revenue for e-commerce grew 110%. The increase was primarily due to higher cost of logistics. We are seeing logistics being a little bit more expensive right now, and other value-added services that they provide to their users, and other costs incurred in each case driven by the growth of their e-commerce marketplace. But right now we can see right now it's just overall cost of logistics and new services that they're adding to the business. If we take a look at sales and marketing, digital entertainment expenses grew 160%. Huge growth there. And the increase was primarily due to higher online marketing costs and esports events expenses as we continue to deepen the engagement with their game community. And that's why I believe this company continues to be one of the highest grossing charts in almost all over the world. If we take a look at e-commerce, that actually grew 141% in sales and marketing expenses there. The increase was primarily attributed to ramping up of marketing service incentives and online marketing efforts, especially during the holiday seasons as they continue investing in capturing markets opportunities in full. So one thing we all know right now is Sea Limited is going 100 miles per hour on trying to grab as much market share as they can. So that's why that sales and marketing expenses has continued to go up. We're already seeing 2 markets that are kind of adjusted EBITDA profitable for the quarter. Super bullish case, but there's still a long way for that to really happen on all their markets. But overall, I understand why this cost is increasing. At the same time, investors should keep an eye out and make sure it's under control. I do want to say one of the main reasons the stock price is up right now is their overall guidance growth. So this company did increase their full year guidance. For example, for the digital entertainment and booking, they were expecting somewhere between 4.3 to 4.5 billion. Now they're expecting between 4.5 to 4.7. So they increased it there, and that represents about a 44% year-over-year growth at the midpoint for the full year on digital entertainment bookings. For e-commerce, they expect 121% year-over-year growth at midpoint. So again, I want to say this company showed very strong earnings. Again, maybe some investors might not be happy about that adjusted EBITDA kind of hitting negativity. Right now, the stock price pre-market is down about 0.35%. Now, let me just share my overall thoughts. C Limited, I do want to say, in forms of stock price right now, it might be a bit overextended. Right now, I have a big position, so how am I going to play it? With my big position, at the moment, I said it's my one of my top 5 positions. I have no intentions at these levels of adding. If I didn't have a position, I wouldn't mind getting some skin in the game. I do believe getting skin in the game is sometimes important and can help a lot with a lot of emotions. I'm super happy with my portfolio size. I'm super happy with earnings. No intentions of selling. I hope you guys have a good day and see you next time.